Pretty much in line, Christine. There's been a common thread in that the higher net interest margins from the higher rates have really bolstered the net interest income. But at the same time, the trio have been able to sustain their non-interest income. That's an important component of their total income. The non-interest income part is now 30%, thereabouts. And because of the increased wealth management activity, the ongoing, I guess, consumer-driven demand, which is basically bolstering their cards business, you've got these record numbers. So growth is poised to double up in Singapore next year from sub 1% to above 2%. And because of that, this is one particular aspect of the market that's in focus. iFast as well, its net profit for the third quarter was up something like 300% year on year on its wealth management business. So that's one key component. But as you said, there's geopolitical concerns as well, as you were talking about before. And the NPL ratios for the three, they do still remain all between 1% and 2%. But I guess the big common factor was, of course, that net interest income growth. The net interest income growth was, that makes up the lion's share, close to 70% of the total income. And it really, in the third quarter, again, made a record in terms of combined net interest income for the quarter. It was 8.4 billion Singapore dollars. So that means for the last 4 quarters, we've seen combined net interest income for the trio above 8 billion Sing dollars. And just for context, there were a good 4 years between the first quarter of 2018 and the first quarter of 2022, where that net interest income was consolidating pretty much between 5 billion a quarter and 6 billion a quarter, thereabouts. Major reason, net interest margins for this past third quarter were above 2%, whereas they were below 2% a year ago.
The recent anti-money laundering issue, how big a negative is that for the banking industry?
I think it's one of some bigger overarching negatives. Loan growth is one particular aspect where there is a little bit of fragility. If you look at the Asia Development Bank back in September, they did forewarn that our Singapore banks would start feeling the pinch from the higher, tighter interest rates in the US. And at the same time, I think MAS preliminary numbers for commercial bank lending, it was pretty flat. It was up a little bit and down a little bit, whether you look at it from the perspective of consumer or business.